In this video, we are going to look at the best trading patterns for beginners, how to identify and trade them. First, we will look at how to identify and trade them, and then I will go onto the charts and bring up some examples. As with all of the videos I make, they are never simply textbook remakes of other videos or from Investopedia. The methods are always tried and tested. I use the exact same methods in this video with my day trading. We are going to look at the ascending triangle and the descending triangle. This is an ascending triangle. It is made up of a horizontal resistance line at the top of the triangle. There is then a sloping support level. You will see the market testing both levels several times with price squeezing toward the end of the triangle. Very often, there is then a breakout to one side or the other. This is a descending triangle. It is made up of a sloping resistance level and a horizontal support. Similar to the ascending triangle, you will see the market testing both levels several times with price squeezing toward the end of the triangle. Again, very often there is then a breakout to one side or the other. What's going on with these patterns? Price is compressing as it respects the triangle. Market movement is slowing down during a period of uncertainty. You can often see a drop in volume during this time. A lot of traders are staying out of the market, watching and waiting for the price compression to come to an end and market sentiment to be confirmed. They are waiting for the breakout and the resumption of higher volume and a powerful price movement. Now let's look at how to identify the patterns. There are two things to look for that will give you an early indication of the patterns setting up. Number one, a double test of similar levels. The highs or lows of two market tests, which will often be swing points, must be at similar levels. Number two, you then look for two market swings, either making a higher low on the second swing or a lower high on the second swing. I am only interested in an ascending or descending triangle at a predetermined support and resistance level. If it is not testing at one of those levels, I will ignore it. That is where I use it as an addition to my trading plan when day trading Zone Trader. I will explain why as we get more in depth with these patterns. We will say that the blue rectangle is a support level we have marked on our charts. We watch as the market starts to test at the level. We then start to look for our clues. Here we see the market swings making lower highs. Price tests two times at similar levels on a support and resistance level. We have a potential descending triangle. Here we see the market pressing up into what would be a resistance level. Price tests two times at similar levels on a support and resistance level. We have two market swings, this time making higher lows. We now have a potential ascending triangle. Here we see the market again testing the level. This time it has pressed above and then pulled back and started to test at what would be considered a support area. We have a potential ascending triangle. You can see the market making a higher low here and also testing two times at a similar level. Now we have the market pressing down and below our support and resistance level before pulling back and testing at what would be considered resistance. We have a potential descending triangle forming. The market has made a lower high and also two tests at a similar level. The key confluence is the support and resistance level. This is where I start removing myself from the textbook definition of these patterns. My rules are: 1. I will only look for buys if testing a support level. 2. I will only look for sells if testing a resistance level. 3. I am using the support and resistance level as an added confluence rather than simply identifying a pattern. The support and resistance gives me an area to watch and also helps determine what I am looking for, buys or sells. 4. I use this to stop me from jumping into false breaks. I already know the type of trade I am looking for when the market reaches my support and resistance level. If the setup doesn't appear, I just ignore the pattern. Let's look at a couple of examples. Here we have a potential descending triangle. The market has dropped down into a support level. This tells me I am looking for buys. Now we see a potential ascending triangle. It is pressing up into resistance. I know I am watching for sells. Now a potential ascending triangle. The market broke above a resistance level and is testing as support. I am looking for buys. Here we have a potential descending triangle. The market broke below support and then pressed higher to test as resistance. I am looking for sells. Now let's look at entering the trades. We will look at 3 different ways to do it. The first 2 are more aggressive, but I find it to be a great way to get good risk-reward trades. By using the support and resistance confluence and lining it up with my trading plan, it helps me take some fantastic trades. The main point is not to enter too early. Wait for the squeeze to confirm itself. The nearer to the end of the triangle, the more volume will be waiting to get back into the market and the more reliable the pattern will be. Our first entry is to look for a signal candle closing clearly above or below the pattern. Here we see a signal candle closing clearly above the pattern. In this case, it is a pin bar. Entry would be above the high of the candle. For a sell position, we are looking for the close below the pattern. Here we have a bearish engulfing candle. Entry would be below the low of the signal. Our second entry is to look for the first candle to make a clean break of the pattern. So it opens and closes outside of the pattern. I also like the candle to not have a high or low touching the pattern, but that is optional and depends on how aggressive you want to be. Here we see a signal candle closing outside of the pattern to the bullish side. Entry would be above the high of the candle. For a sell position, we are looking for a clean break below. Entry would be below the low of the signal. Our third entry would be to wait for the retest. In this entry, we wait for the market to break out of the pattern. We then wait for the pullback, and as it reaches the pattern level again, we look for an entry. The basis of this entry is that people wait for the breakout to confirm first before getting into a trade. They want to avoid a false break. They instead use the retest as an entry. Those who also miss the breakout due to not identifying it initially use the retest as a second chance to enter. Here we see bullish breaks and a retest. And this would be bearish breaks and a retest. You wait for the market to confirm the break. On a retest, in this case of the sloping support, you identify the signal candle and again entry would be above the high. For a bearish break, we see the retest here at the horizontal resistance. Entry would be below the low of the engulfing candle. What about stops and targets? This is when you can really start to separate yourself from the herd of losing traders out there. Most people want it handed to them on a plate. The reality of trading is that it doesn't work that way. Every trader is different. You will trade different markets to another trader, different time frames. The patterns you identify and trade will not be the exact same ones as another trader. What does that mean? It means that a one-size-fits-all trading approach doesn't work for trading. I will give guidelines, but you must be willing to test your strategy and figure out what works best for you before you start to trade live. Your risk reward must fit with the trades you take, not anyone else. That means you need to be willing to test your strategy and make it fit for you. I will give guidelines that work for me. For stops, I keep them relatively close to the entry candle. I am looking to maximize risk reward on these trades. Added into my trading plan, and from a strong support and resistance level, I consider them to be high probability setups. For targets, again, added into my trading plan, I consider this high probability. I suggest a minimum of 1-to-1 risk reward. I like to get my stop to break even after 1-to-1 if I'm looking for a larger move. Okay, now let's jump onto the charts and we will identify some of these patterns. Okay guys, now we're going to start looking at these patterns on the chart. Now the first thing to say is I have no idea which ones are going to show up. I don't know if there will be more ascending triangles or more descending triangles. We're just going to sort of look through the charts, and the ones that pop up, the ones that are really obvious, so the ones that we want to identify and trade, those are the ones we will go through. Now we're also not going to spend too much time on support and resistance. That's really a completely separate subject. So if you don't understand support and resistance or how to pick out the best levels, there is a video on the channel which I will link you to. That takes you through the basics of support and resistance. There's also on the website something called the Decisive package. The first section of that package is absolutely free. And I believe the first seminar is on support and resistance, and that takes you through all of the sort of things that I look for when I'm plotting these levels and what helps me pick out the very key levels. So we're going to use the CAC 40, which is the French index. We're going to use the Forex pair Euro USD, and we're going to use the UK index, the Footsie 100. We'll use the daily time frame for the French index, the 4-hour time frame for Euro USD, and the 1-hour time frame for the Footsie. So we can show that it works across markets and across time frames. You can really use this on, Forex, indexes, commodities, even crypto if that's what you trade. And what we'll also do is when we're looking at them, you'll see why I can't just say your stop should be X amount of pips above or below the signal, your profit target should be X. It comes down to what you are trading, the volatility of the market, the time frame of the market you're trading, and how you trade. So separate yourself from the majority of traders out there, and start to do the testing, start to back test. Don't just take what you see in a video and try to implement it with real money. Take your time and give yourself the best chance of success. So we are starting on the CAC 40. We are on the daily time frame. All I'm doing is I'm just sort of going to go back on the chart, and we're looking for the ones that really scream out at us. So when you're identifying patterns, you don't want to do things like here. Okay, you don't want to look at this and say, okay, you've had maybe a swing here, a swing here, and a swing here, and you've had a little bit of support here. This is incredibly difficult to identify, and the problem is the vast majority of people are not going to have seen this price squeeze. Now this one, it does make a move higher, but if you try and focus on things like this, you're going to have a lot of false breaks, a lot of poor trades. So focus on the really obvious ones first, and then as you get better, you can start maybe looking at more complex patterns, the ones that are a little bit more difficult to find. Okay, so straight away, we've got one. We've got a resistance, and a resistance. This is a sloping resistance level. We've got support, support, support. This is a descending triangle on a support level. Now, has it been used as previous support and resistance? Yeah, okay, perfect. Nice, clear-cut, solid level of support and resistance. Actually looks like there's another squeeze in there, which we're going to come to as we scroll back. So the market tests, support, support, support. What we can also see is we get the market trying to break down, and then we start to press back up again. We are only looking for buy positions. This candle breaks out of sloping resistance, it's a pin bar. Or potentially you're waiting for the first candle to break out of the pattern. So the high, low, open, close of this candle is no longer in contact with the descending triangle. This is exactly what we're looking for. It's very easy to identify. The break is nice and clean. You're not having to really sort of stare at the chart and figure out where your sloping support or resistance level is, where the swings are. It's very, very easy to see. Entry above the high of the candle. So this is the breakout candle. Stop is going to be below the low. If you're using the first signal candle to break, you're entering above the high, and your stop is below the low. Now, the reason you can't just use some arbitrary number is because, let's say this here. So that's 120 pips on this market and on this time frame. If we just go on to, let's say, the Footsie on the 1 hour time frame, and let's say we do this, let's say this was our breakout candle here. It's 28 points long rather than 120. That's why you can't use the same sort of size stop through timeframes and through markets. It has to make sense to your trading and what you are doing. So, right here, around about 120 points. So 1 to 3, 1 to 3.5 on this particular one, this one here. About 90 pips. So 1 to 4 on this one, potentially. Let me just double check that one. Actually, this one's around about 100 pips, 110 pips. So 1 to 3 risk to reward on the entry. Nice clean pattern, nice clean break, nice clean strong move higher. That's exactly what we're looking for. We're back at this one that I was just talking about. So let's mark this up. We've got support, 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 support. Multiple levels of support. Very easy to identify. Market making, can I actually maybe take this all the way from back here, but we're making lower high, lower high, lower high, lower high, lower high, lower high. Again, very easy to identify. It's happening multiple times. We're seeing the market get right toward the end of the pattern. Now, first of all, what is this? And what is this? This is a false break. Down. Lots of traders getting in here, turns around and goes the other way. That's why we use the confluence of our support and resistance level. Now, going through this video, I'm very aware that most of the time, the support level is going to be the horizontal support and resistance. Same with the resistance level. That's because we don't have all of our support and resistance levels pre-marked. If you are trading this, or when you're testing it, obviously you mark your support and resistance levels first, and then you start to do the testing. It's a little bit more difficult to pinpoint the ones that are just breaking down below this level and then starting to use it to go for the opposite break. But for the purpose of this video, what we're doing is we're just identifying the very, very simple ones, the very, very obvious ones. What have we got here? A candle breaking out of this pattern, no longer in contact with any of it. It's the first break. Your stop is going to be 70 pips. So over 1 to 4 risk to reward before you get any sort of key resistance starting to come back into this market. Again, very, very easy to identify pattern. Now on the daily time frame like this, these are going to be very spaced apart in terms of days. That's why you would have more than one market. Be looking at the sort of key markets that you like to focus on, the ones that are starting to put in the really good patterns. Those are the ones you look to start potentially trading. So I'm just sort of looking as we're moving up. So you've got kind of the market making low, higher, low, higher, low, potentially a little bit of a squeeze up here. And the reason I like this is because we break out. Let me just draw this in. Because this looks like a support level. Now it's breaking a little bit away from it, but with this pattern, you get the breakout, you get the pullback, you get the retest. So you're extending across the sloping support and resistance. You can see the retest, and the market gives a nice, strong, bullish bounce. Let's see if we can find a couple more. So there seems to be one here. We're going to go over this one. So low, higher, low, higher, low. The reason I want to go over this one is because it doesn't work. We're testing at resistance, 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 support, support, support. We then start to break down and we don't really go anywhere. So first of all, this would be your engulfing candle. It would be a potential signal candle. About 100, 110 pips. So you do actually get to 1-to-1 on this one if you're bringing your stop to break even at the 1-to-1 level. So it would be a break even trade. But the reason I want to go over this is because it doesn't work. When you're trading, it doesn't matter how strict you are, how good your analysis is, what you're using to trade, you're gonna have losing trades, and you need to learn to accept that. And one of the best ways to help you advance as a trader is through only focusing on the very, very good setups. And by doing that, hopefully you're going to have more profitable trades. But you want to do lots of practice, you want to do lots of back testing, and get used to whatever it is that you're going to be trading. The market's starting to get pretty choppy. Where are we here? We're back in 2015 now. I don't want to go too much further on this market now. Potentially here, but it's not really squeezing, it's just a flat section of price action. Up here we've got a nice double top potentially. Another one here actually, which is looking pretty good. Okay, so nothing really. There's actually a little triangle here. I'm not going to go into this one because it's not what we're going over. In the future, I am going to do more videos on patterns and how to potentially trade them. Triangles are one that I use. Double tops and double bottoms is already on the channel. Head and shoulders pattern, also things like trend channels. These are all really good patterns to start learning as a trader because they're beneficial not only to a beginner, but also to someone who's been trading longer term. Okay, 1, 2, 3. Support, support, got support all the way back here. Let's actually mark this in with a horizontal level. Okay, so market comes down, fails to break below support level, pushes up, tests at resistance, breaks down, support level, presses up, again confirms resistance, and then you get the breakdown again, confirming support. 1 test, 2 tests, 3 tests. Really, really good. You could actually bring this support level up a little bit because if we look here, it's giving us the clues as to the support and resistance level. Multiple tests. What does the market do? Once it gets to the end, you get the break here. This looks like a pin bar. You then get this one. This actually looks like an engulfing candle, but we're looking at it because it's simply the first candle to break. Again, exact same thing. Stop above the high. Entry above the high, stop below the low. Entry above the high, stop below the low. Very, very simple. Relatively close, trying to get the stop as tight as possible. A little bit smaller. The reason I actually like this one a little bit more is because it looks like it's going to be a slightly smaller stop. This is a pretty big candle. So, yeah, so 250 odd pips. You still get almost 1 to 4 risk to reward before you start to get the resistance coming in. But with this one, what we're going to see is 160 points, 160 pips. And we're making an almost 800 pip move. So, yeah, so fantastic risk to reward on this one. Over 1 to 4 risk to reward. Okay, now we're going to move on to Forex pair Euro USD. So I just want to reiterate, I don't know what patterns we're going to find. We might go on to one of these and there's not going to be anything to go over. It's just going to be a little bit boring watching through the video, but this is how you sort of test these patterns and how you're going to start to identify them. So things like trend channels, yep, sort of things I'm going to go over in future videos. So I'm not focusing too much here. This one's not really the cleanest. I've got nice support levels, 1, 2, 3, 4. 1, 2 swings, but it's just not the cleanest. If you took it like this, yeah, potentially. The reason it catches the eye is because although we've had 1 and 2 tests, it's the second test is following the sloping resistance line the whole way down. Yeah, so it would give you that sort of clue to look at this, but it's not a very clean pattern. It's not a very good one. In fact, this one's actually trying to sort of look at it. It's not ideal. Potentially. The reason I want to go over it is I am actually looking for trades that are going to be losing trades. Now this one here, it doesn't really look like a very key candle. It's not a pin bar, it's got too much rejection at the top, but this would be your breakout candle potentially. The reason I also am not too keen on this one is it's not very developed. You know, we've still got quite a way to go before we get to that compression point. But yeah, breakout candle potentially above the high, It's your entry. Below low, you just stop. Risking around about 25 to 30 pips. And it gets the 1-to-1 risk to reward. Potentially it stops at break even at these levels. And then it comes back down and takes you out at break even. Okay, so perfect. Very easy. I'm just sort of looking and it's jumping out of me. Support, support, support. We're making a sloping support level. Test, 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 and also test right at the end. Our resistance is multiple tests up here. False break, false break, false breaks. Multiple times, people will be trying to buy into this, looking for nice move up, test, 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 and the breakout. We are using this as our clue. We're only looking for sells. Engulfing candle, breaks down. Very nice and easy to identify. First candle that breaks out of the pattern. Up the high is the stop, below the low is the entry. Entry is around about the same for the other candle, but our stop's a little bit tighter. So you're either risking 65 pips, so let's say 70 for ease. There's 1-to-4 risk to reward. There's 1-to-5. Or you're using this one, risking around about 40 pips. There's 1-to-4, 1-to-5, and it just continues going and going and going. These are the ones that you really are looking for. You know, as you're trading, you're going to take your losses, you're going to take your break evens, but you're looking to catch the big winners. You know, those are the ones that build your account. And potentially this one, it's making high, lower high, lower high, lower high, squeezing all the way down. The reason I'm not too keen on this one is because you got support, 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 and then makes the false breakdown, and then you get the breakup. It's quite a strong breakdown. I don't really think I would continue looking at this pattern as we started to break back up again. But that's the sort of thing you would be looking to identify. As it starts to break down, and you can just see by looking at the left, key support. Yeah, it's giving us the clue that it's potentially support. And also, if we come a little bit lower, key support. But lots of people are looking at this as a squeeze. As soon as it starts to break down, they're getting short, it's moving down, they're getting stopped out. That's why I use it as that added confluence. It's a really, really good way to help you identify the potential setups. Okay, so this is one where it's testing as resistance. Support. I'll come to the left. Okay, so it's not testing at resistance because there's no resistance there. Okay, so what are we looking for with this one? Is it testing at support? And there's nothing there to identify it. So with things like this, if you want to trade it, you can trade it. I wouldn't personally trade it. There's no real key evidence of resistance. There's no real key evidence of support. Certainly not in any sort of recent history. But you do get the breakup and you get the move higher. So I want to go over this one because it's maybe a little bit more tricky. So you've got resistance, resistance, resistance. You've found support once and twice. Support, support, very nicely. Come to the left. Yeah, nice little support level. Come to the left, key support. Yeah, so it's support and it's support. Now it's a pretty good potential setup. The reason it's more tricky is because this candle is so large. 150 pips nearly. So this is sort of one that you'd really have to consider, do you want to take it as an entry? And then if you get the first breakout candle, it's so far from the pattern that there is a very real possibility you'll see some sort of a retrace before you bounce higher. This might be the sort of one you'd wait for, potential pullback, retest and bounce. We don't get it here, that's absolutely fine. You know, if you don't get it, you don't get it. So support level down here. Just sort of looking if we're making any nice clean squeezing price action, and we are. Resistance, 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 resistance. Nice clean support level. Not really toward the very end of the pattern, but nice clean breakout with the engulfing candle right here. Entry above the high, stop below the low. Huge move. Okay, so now we're going to go on to the Footsie 100 1 hour time frame. So this is the market that I trade day to day. I trade it on the 5-minute time frame rather than the 1 hour time frame because I am day trading. Let's have a look and see if we can find anything. So again, I'm just doing the exact same thing. I'm looking for the very, very obvious things that sort of jump out at us from the chart. Hopefully we'll find a couple on this market. Support, support, support. No real descending line. Potentially quite a steep one. The only reason a little bit hesitant is the support level looks like it's here. Test, test. Coming into the future, we start to get that descending triangle. We've got a test. It's not really testing, and then we get a false break before we get the breakout. Not very clean, but this would be one that breaks out. You get the pullback. You look for the retest. You get the pin bar. And you look for the continuation. This one, a lot more clear. So this would potentially actually be one where, first of all, you're looking at a support and resistance level. So resistance, support, support, support. You're not looking for the breakdown. You miss the trade of this one. You get a little bit frustrated. It comes down. Into another key support level. Now, it's potentially a much bigger triangle. So this is the exact same sloping resistance level, and it's still being respected. Test, test. 2 tests on support, multiple tests at sloping resistance. A little bit of a pin bar, potentially a doji candle. First candle to break. Entry above the high, stop below the low. Entry above the high, stop below the low. So potentially this one, risking around about 13, what are we on the Footsie 100, 13 points. So say 15. 1 to 4 risk to reward. This one here, you're risking 35. So over 1 to 1 risk to reward. Let's have a look if we come back to break even though. We do come back to break even, so it would potentially be a break even trade on this entry. If this was an entry candle, you'd start to get pretty good risk to reward. Again, there's one here, it's much steeper, but it's very easy to identify. It's the same support level, yeah? Still being used as support. Here's your clue, multiple tests. Very, very steep. You could actually say this is also a channel. You know, testing, testing, testing. It's giving you 2 different patterns. You then start to break out potentially with the pin bar right here. You could say this is a very small breakout and retest before you get the continuation. Or you could use the first candle to break, which would be right here, and the market then takes off. See if we can find one more on this market. So again, I'm just looking for the obvious patterns. There's one right here. All I'm doing is I'm looking for 2 swings, making a higher low, with the 2 levels testing at the same, relatively similar levels. Or I'm looking for the lower highs, with the market testing at similar levels down below. So yeah, 1 test, 2 tests, you can see it crawling up the sloping support level. You then get a very strong break here. In all honesty, with this one, it's such a strong candle. You know, almost 50 points. Do you really want to enter below the low of this and have your stop above the high? Do you really want to enter below the low of this when it's so far away from your pattern as the first candle break? Not really. So you see this, sets up perfectly, you're waiting for it for hours. It doesn't break very well. Just skip it. Just don't take it as a trade. You would still get a nice move down. Looks like you would get 1-to-1, 50 points. Yeah, just over 1-to-1, so stop the break even potentially, but it's not a very good setup. Okay, so that's pretty much everything. So we went through 3 different markets, 3 different time frames. We've looked at the patterns. As I mentioned, there's no real way to control which ones come up. We have looked at a few. I've showed you how to put your stop in, the potential for the good setups with their profits, if you let your profits run. And that's pretty much everything. What I would say is you want to do some testing on this and get some practice on it. Don't just jump onto a live account. You want to do it on a demo account or paper trades after you've done your testing until you can start to see consistent results, and then you can start to implement it into your trading plan. I use this as part of my trading plan. I don't just trade this by itself, because I have a trading plan which helps me identify the key levels of support and resistance, and I have a trading plan which tells me how to get into the trades, what I'm looking for, and that just helps me sort of refine it down to taking those best entries. Okay guys, so hopefully you enjoyed that. If you did, please give the video a like. You can subscribe. Also, there are a lot more videos to come. I hope that was useful, I hope it was helpful. I'm James Orr, and thank you.